What's up, guys? It's your boy Brian. Listen, I'm coming in with some hot information, about a loan program that I'm doing my best to learn about, but it's fairly new, so there isn't too much info out at this very moment. It's been around for a while, but I guess the media has now been enforcing it a lot more. So it piqued my interest, and I'm like, you know what? Let me share this to the people. So Bank of America tests no down payment mortgages for minority communities. They're doing it in a couple different cities: Detroit, Los Angeles, Dallas, Miami, and North Carolina. Credit scores, they're not basing it off of that. They're basing it off the history of you paying your phone bill on time, your utilities, you're making your rent payments, your auto insurance payments, things of that nature. Geared towards minorities, they're saying, quote unquote, towards African Americans and, let's say, Hispanics. That's their definition of minority. All right. On top of that, people, on top of the no down payment loan that they're rolling out, they're also willing to give you a $15,000 credit towards, let's say, your closing costs. So they're giving you money on top of the loan program. So you're pretty much getting a house with nothing down, and with just being qualified off of your payments on your utilities, your phone, your stuff like that. No credit check. All right, so a couple things that they're saying is this. One, they don't want to put people in homes that can't pay it, so they're going to qualify you based on your income. There isn't really a threshold on how much you can be qualified for, or how much, what's your income limit that you can't qualify. They say they're basing it off of minorities, right? But when you apply, you don't have to disclose your race. So I'm gonna be honest. I am a little confused. I guess I haven't found the direct source of it all just yet. Even on their website, they don't have all too much information about it. But with that being said, my honest views on it is this. If they do, let's say they do qualify you, right? They do qualify you, even though there's a little bit of, let's say, bad data on your utility bill, or you missed a couple payments, and they still qualify you. In my personal opinion, I think that's a red flag. Because one, you're obviously not able to be responsible with a mortgage payment. And a mortgage payment is very important. It's very significant, right? If you miss a couple mortgage payments, listen, you're going to get foreclosed on. This is just not an eviction. You're losing a house. This is money that you have to pay back to the bank. It goes on your credit to hurt it even more. Like, there's a lot more that goes into it. I hope, and I know I'm going to get a couple clients that go through this process as well, but I just hope that, it's not one of those things that's making it worse than what it already is. What do I mean by that? If a person's credit already bad, that means that there's certain times in life they have been irresponsible. And over a long period of time, let's say 10 years, their credit has not improved at all, and they're still gonna get a house. Like, that's a recipe for disaster, in my opinion, right? I really couldn't tell you, man. And the places that they're targeting, like Los Angeles, California, is a very expensive market. Miami, very expensive. These places aren't cheap. So I digress. As I get more information, I definitely want to do a part 2 to this, because I think for a responsible person, not only will it be beneficial and bridge the gap into home ownership for you, I think this is an opportunity of a lifetime, and we don't know exactly how long this is going to be. So